Trade is evolving, and so is the way we finance it. In this episode of Candid with CredAble, we sit with Mr. Anurag Singh, who is the Director of Structured Trade at CredAble. In this conversation, we'll discuss how working capital is evolving, what are the few new trends happening in the market, what are some key focus areas within structured trade, and how can large corporates leverage this. So, Anurag, my first question to you is, why is working capital in focus now more than ever?
I think global macroeconomic conditions, rising interest rates, currency fluctuations, and the uncertainty in geopolitical relations, all these are putting pressure on corporate balance sheets. Traditional credit lines are becoming more expensive, and CFOs are now required to do more with less. There's a growing importance towards growth with liquidity discipline, and we are seeing this across the industry. Unlocking working capital, it has become very important, whether this unlock is happening from payables, receivables, or inventory. And it is more so important in sectors which are capital intensive. There are structures and solutions which sit at this intersection of finance and supply chain, which make it a very efficient way of unlocking liquidity from working capital. And in today's episode, we would like to talk about that.
Okay, sounds very interesting. I like how you mentioned how working capital is becoming a strategic lever, and the organizations who use it right will succeed in the future. In this context, which part of working capital do you feel is still a bit unsolved for the large corporates?
So, Uttkarsh, working capital has three primary levers. So, payables, receivables, as well as inventory. We have seen enough work being done on the payables and receivables side. There are a lot of solutions which exist in the market which tackle these two issues when it comes to working capital. But inventory is something which we believe and we have seen in the market is still unsolved for. Most corporates are either using their own funds to manage this inventory, or they rely on working capital loans from banks to fund this inventory, or the working capital that is getting blocked in this inventory. Over 60% of working capital is tied up in inventory in these large companies, which shows us that there is this is a problem which is ripe for solving. And I think there is a huge opportunity when it comes to finding solutions which help in discovering this liquidity which is trapped in the inventories of these large corporates.
And this is a problem that, because CredAble is in this industry, we hear a lot directly from the market that inventory becomes a pain point because a lot of working capital gets locked here. So in terms of inventory, what tools do you feel can help corporates kind of bridge this gap using inventory?
Structured trade is emerging as a tool which corporates can use to unlock liquidity, especially trapped in inventory, while it is also applicable for payables, but inventory is a harder problem to solve. So structured trade is a very good tool which can be used. It allows corporates to bring their inventory to the right size as per their business requirements, while having control over that inventory. We have seen in industries which are very volatile or where the raw material is seasonal, corporates end up holding a lot of inventory which they are going to use over a period of time. So our structured trade solution, especially when it comes to inventory, can help the corporates in managing this inventory better, in right sizing this inventory, and without disrupting their physical supply chains. Unlike the traditional models of inventory financing, whether you look at working capital financing or vendor managed inventory, our solutions are flexible, they're asset light, and they're built around the commercial flow of goods, making it a very powerful tool. We have seen, and based on our research, structured trade can improve cash conversion cycles for corporates by up to 25%, which improves the liquidity which is available to any corporate without negatively impacting the balance sheet. In fact, there's a positive impact on the balance sheet of any corporate who is implementing a structured trade solution for managing inventory.
Absolutely. I feel like you mentioned, right? So managing inventory and liquidity around it through structured trade solutions is definitely one of the key areas that, of course, CredAble operates in, and we see market also bending towards. So one question that we get very frequently during our conversations with customers is that which industries do you think these sort of solutions can be implemented for?
So any industry which has a very large vendor base or a complex supply chain, or an industry which has a low inventory turnover, industries which have seasonal procurement, which could be, say, an agri procurement, which is because the agri produce is only available during specific months of the year. So any such industry can benefit from such kind of structured trade solutions. CredAble has executed these kind of just-in-time inventory solutions for a wide range of industries. Just to share a few interesting examples that we have done. For a European agri player, we were able to help them mitigate the challenges that come from seasonality of availability of this inventory, and how staggered their offtake was. So we were able to help them with that. We also helped a large Asian retailer achieve a close to 90% reduction in their inventory holding levels. The use cases may vary, but the outcome is same. Improved liquidity, lower reliance on balance sheet debt, and smarter inventory management.
Anurag, like you mentioned, CredAble is making strides in this area with doing certain structures across the globe. So it's very interesting to see how this part of the ecosystem is growing. For a CFO who understands structured trade, what would your one advice be to that person, how they can implement this in their org to see a use case?
I think one key thing while looking at any structured trade solution is to have a long-term objective in mind. Because in implementing any kind of structured trade solution, there could be short-term pains with respect to changing their existing processes. But if the long-term goal or objective is clear, that this balance sheet improvement is going to help the company become more agile, generate better margins in the future. As long as that objective is clear and aligned internally with everyone, it becomes very easy to implement such kind of solutions.
Got it. So short-term pain for long-term gain.
Correct.
Would be the motto for structured trade, specifically when we speak about inventory. So Anurag, we understand that CredAble is solving for working capital holistically. CredAble has an NBFC license, does lending as well, does technology for working capital financing. How does structured trade kind of fit into this vision of CredAble?
So Uttkarsh, structured trade solutions are inherently complex, involving detailed structures, multiple stakeholders, and documentation. What sets CredAble apart is our ability to simplify and scale these structures by using technology. And with structured trade, our aim is to continue using technology to make these solutions seamless, well integrated into the whether it is the corporate CRP or whether the integration is with the bank. Our aim is to make sure that these run smoothly without any errors and in real-time basis, because the last thing we want to do through these solutions is to disrupt any corporate supply chain. So that is of paramount importance to us, that no supply chain should be disrupted for implementing a structured trade solution. Having been in this space for close to a decade, CredAble is well positioned to provide solutions which cover the legal aspects, the financial aspects, as well as the technology, usage of technology to ensure that these solutions are delivered to our customers in a seamless manner.
Got it. Awesome. So, Anurag, essentially, CredAble has wealth of expertise in this area, and we've been implementing working capital solutions, structured trade solutions across. It's good to understand that while we understand the space, but we also not want to disrupt the existing processes of the corporates. So in this discussion today with Anurag, we discussed how working capital has evolved, how inventory and structured trade finance can be a very easy solve for some of the large problems of these corporates. However, it's important that CFOs understand that it could lead to like a short-term pain, but in the long run, it can help them meet their strategic objectives. So thank you, Anurag, so much for spending time with us. It's been a lovely chat, and I believe this conversation will benefit a lot, specifically the CFOs who are in the market for structured trade finance. And it fits well with CredAble's vision of kind of serving working capital entirely for all players in the ecosystem. Thank you so much.
Thank you so much, Uttkarsh. It was a pleasure.
Thank you.